Okay, so we're earning over 1 million in dividends per year, as you can see, but how can we protect this? We like ULTY, we like WPAY, but which fund is the best for our strategies going forward in a volatile market when we want to live financially free from a 9 to 5? If you need help living free from 9 to 5, email me for my e-guides at akintodd48@gmail.com or head to my website, unconventionalwealthideas.com, where we're leading the FIRE movement. All right, you can learn all about my e-guides there and everything we've done with Yieldmax, etc., etc. Okay, so we had a lot of volatility last week, and a lot of people lost their shirts. And a lot of people were saying this is because of ULTY, but I saw WPAY down 3%, for example, one day last week when the market was down only 1%. And so we still outperformed. We're up 32% for the year. I'm not saying ULTY did any better. We'll talk about ULTY and WPAY. We're going to compare the two. And again, we're going to decide which fund is the best for us to concentrate our money in and our allocations in, again, to live free from 9 to 5 safely, because yes, we're up 32%, but we want to do this safely with funds that actually give us a positive return over time. And of course, we use margin, which $763,000 in margin debt right now is my debt. And a lot of y'all might say, oh man, this is alarming as well. Well, last video I showed y'all that was largely short. And then this video, I'm going to share with you why I got my margin debt up so high as well. It wasn't from adding those shorts. All right, so it's very important that we go through the holdings of ULTY and WPAY. And again, we understand that with our performance here, up 32% when the S&P is only up 15%, the Nasdaq's up 20%, the Russell's up 12%. With this performance, 32%, we've stayed relatively flat. Look at our chart line here, all right? And if you go look at Bitcoin and some of these other meme names, even an ULTY chart, you're going to see massive destruction in your portfolio. So how have I been getting ahead? How am I doing this? All of my members know that the thing that I've been doing in this recent downturn is I've been simply using my deleveraging, okay? So that's, a separate subject, but if you want to know how I'm getting through this market, it's because I use ULTY, Yieldmax, Roundhill, Defiance. I use these funds to delever and go 1 for 3, 2 to 3. If you don't know what I'm talking about, that's all in volume 7. I've been sending out massive alerts to my members all week. Okay, you can get those alerts here on Discord or here on Circle. When you buy my e-guide, you get Discord for life for free. Okay, you get my number and you get Discord for life. And then you also have this option to go access Circle, where I show you my members' trades and I show you how I've been delevering. Okay, so we did a lot of moves here, but that's because, again, we delever, out of our leverage, okay, out of our margin leverage. I use all these funds. Again, Roundhill, Defiance, ULTY is one of those funds that I did not delever from, but I did delever from WPAY, okay? Why did I delever from WPAY? We had about 50 grand in it, for example. I delevered without losing, for one, and we bounced back harder, okay? So we don't lose when we delever because of the way that I did it, the vehicles that I chose. Everyone saw those alerts. But I cut WPAY in half, for example, on that day of max volatility that we had. What was it, Monday or Tuesday last week? Bitcoin was falling hard. The market was only down about 1%, but many people were losing their shirts. And again, in something like ULTY and some of these meme stocks, like a Palantir, a Robinhood. All right, all these are exciting stocks. Coinbase, MicroStrategy, they're all fantastic. I own them all. However, people were getting killed last week, okay? And I wasn't. I stayed up because I know how to delever, which again, I laid all out in volume 7. I think many members will attest to volume 7 being the best e-guide I've written, because all of my e-guides show you how to make money. All of my e-guides show you how to live free from 9 to 5. They're all great in their own rights, but the thing that gives me no fear when I invest is not only I stick to the principles and I stick to the indexes and I believe in what I do. I have a track record. I've been doing it for 20 years, so I'm used to my results. But the other way that I don't fear anything is because I know how to delever. All right, delever without losing any money. We just get tax loss harvesting back, and then we bounce back even harder. That's how we're up 20,000 on Friday. We're actually up 25, but they don't show our sold puts there. And you delever and then bounce back harder. Okay, so we bounce back harder, and Here's that picture right here, for example. You've seen many days where we're at 50,000, 70,000. We bounce back hard the next day. We bounce back 25,000 yesterday or whatever it was on Friday. And so we're falling about the same as the market. In fact, we're falling less than the market. We just had a little bit of a blip on that radar because we were falling with Bitcoin. Bitcoin was also on the 200-day moving average. It was a very significant time. So as Bitcoin goes, so does a lot of risk off assets go. Okay, the riskier assets, Robinhoods, the MicroStrategies, they're all going to fall if Bitcoin's falling. It's a sign of risk off. Everyone knows here, small caps and Bitcoin lead the way for risk on. When small caps are rallying, it's a good time for the rest of equities, because if small caps are rallying, it means that risk on sentiment is present. So we had risk off. We had Bitcoin and those names falling. We didn't fall as hard as the market. We fell a little bit with Bitcoin, but look at our performance. We stayed up 32%. And then we bounced back hard. You saw those gains I just showed you. That was because we, used all the strategies in volume 7 on how to play the triple C's, okay? So it's not just the triples and the C's, Cornerstone, and that volume. It's how we use Yieldmax and all these other funds to delever, all right, and then bounce back stronger and also hold up, okay? We've been holding up well because of our hedges. Now, that's not why my margin debt went higher, okay? My margin debt did not go higher this week because of hedges. I told you that last week. That's how we protected ourselves. Okay, we have our put options, we have our hedges, we have all sorts of hedges, which we talk about in volume 5, of course. That's in my volume 5 e-guide. How to protect your portfolio. So we used our hedges. A lot of them worked well, but it was also, again, how we delevered, how we went into other funds. I'll say it for the umpteenth time. I don't care how many times I have to say it. You have to know how to not only construct your portfolio for max income and index performance. You want both at the same time. You want dividends of over $1 million per year plus days gains, which we're beating the market. But you also want to fall less than the market on a down day if you can, or fall generally in line with the market, but you get your dividends back, and then you're beating the market. But then again, you have to know how to bounce back strong. And these names don't necessarily bounce back strong. I mean, ULTY was up, 1 or 2%. Okay, the names that we're in, they bounce back strong. Okay, a lot of the leverage vehicles that we use, yet we didn't get hurt because we watch our position sizes in those leverage vehicles. So here with ULTY, you also need to understand that a lot of people have been saying the sky has been falling for ULTY. I don't even understand what they're talking about. Look at the holdings of ULTY and then go look at their charts. That's why ULTY's been falling, because a lot of these names within have been falling. Go look at Coinbase. It's been falling. So it has nothing to do with ULTY. ULTY is up since inception 16%, as you can see here. So ULTY is not the problem. It's the holdings within. And even though there was some volatility last week, ULTY actually held up pretty well. These names are hedged from what I understand. So if nothing's changed since the last videos we've done, ULTY also has protective positions in their funds, in each of these funds within their fund, each of these stocks. And so that's going to give them downside protection. And then we hedged with Salty, which was up as much as ULTY was down, if not more, during that recent downturn. So for me, I was winning big because we weren't falling by as much as the markets. Yes, we neutralize our day's gains and losses, but we get it back in the form of dividends, and then we get our big gains from the triple C's, which I keep laying out is in volume 7. And again, if you go look at what Cornerstone did, Cornerstone also held up well last week. Yes, it had a little bit of a dip, so did the market, but a lot of people were saying, I had one guy say, why is Cornerstone falling big with the market? It's not falling big with the market. However, it just had an ex-dividend date, so you have to learn how to play things like Cornerstone and Yieldmax and Defiance around their dividend dates. Roundhill, of course, there's going to be a drop after the ex-dividend date. But this just coincided with the market fall, the ex-dividend date. So it worked perfectly for us. Cornerstone actually looks like a nice setup here. I've been buying. My members know this. And, it looks like solid support right here at this, 794 area. Look at how it bounced off the support area before. So if you're looking at Cornerstone and how to stabilize the volatility in your account, you'll see that this chart largely, you go sideways. So your portfolio is stabilized, and it had a minor pullback. And so we used Cornerstone because, that is the index with the largest fund around, the largest dividend yield around. It's one of the oldest funds around, Cornerstone. It's a 4-star fund. It's been around since the 80s, and it's completely indexed, just like SPY or QQQI, but it gives a bigger dividend. So why wouldn't you be in Cornerstone? It also drips the dividend down at the NAV really quickly. And let's do a NAV check. We're at 19% now. So we're getting a 21% dividend with Cornerstone and 19% gains every month on top of the dividend. I don't know if you can understand what I'm saying to you here, but Cornerstone holds up well in a downturn. It drips the dividend at the lows, so even when the market's falling, you're dollar cost averaging at the lows, and so we're holding up. Our NAV is holding up in our account because we get these instant gains from Cornerstone every month. We've seen north of 30-40% gains in Cornerstone, okay, with this premium drip on top of the dividends and on top of the day's gains. So we had a strong bounce back with Cornerstone on Friday. This doesn't show the true chart because this is after hours, but we had, a 1% move or so, 1.5% move in Cornerstone. Okay, it was a big day for Cornerstone. And again, it doesn't show here in the after hours, but the market was up about 1%, and so were we, and so was Cornerstone. So that's how we stay up with the indexes. WPAY had a nice bounce back, okay? WPAY, nice bounce back. But look at how it fell. It's not back at the highs, okay? Go look at something like SPY. SPY is back at the highs, okay? So you have to be careful with WPAY. Cornerstone's not back at the highs, but I guarantee you Cornerstone, I'm not going to say I guarantee because I don't give financial advice and I don't make predictions, but Cornerstone goes to new highs on its chart. Look at how it does on its chart. It makes it to new highs. It'll surpass these old highs if the market goes higher, whereas Yieldmax, ULTY, and these names, they will not surpass old highs, most likely, unless you have some huge run in ULTY. Maybe it would surpass these old highs, but don't ever look to get back to these old highs in ULTY. You might as well just kiss them goodbye. It's not about the chart of ULTY. So many members are complaining, I would say some members of mine, but not, it's a small percentage, I would think. Because look, we have the chart here of ULTY, but this is not what you look at. You look at total returns of ULTY, which I already showed you were 15% since inception. So you have to factor back in those dividends. Same for Cornerstone. Okay, you factor back in the dividends. But with Cornerstone, make sure that you do this one slightly differently. Okay, you can't just buy Cornerstone and hold it forever. You use it to your advantage to play it around the rights offerings. Or the high premium thresholds, which, that's what we specialize in at my channel. That's what Discord was started for. It has over 3,000 members. Okay, we have over 3,000 members in Discord, which is hard to believe since we started this channel. But most of it is because most of this Discord activity is from the Cornerstone rights offering announcement. We give you the announcement here on Discord. And so this is when we, really timed Cornerstone well last year during that rights offering to sell out, okay, at the highs. And I always say it in every video if I can because I'm so proud of that. Look at this high in Cornerstone right here, and then this drop. We sold out right here, okay, because we get the alert at Discord, okay? Again, if you need help playing Cornerstone, that's in my Volume 4 e-guide, and we give you the alert for the Cornerstone rights offering announcement at our Discord chat room. It's the best chat room in the world for financial information, okay? So we have a Yieldmax channel here, a Roundhill channel, Defiance, you name it. We have it all here, a crypto channel, but none of them are as important as that rights offering announcement. Okay, that's the big value. When you buy my e-guide, you get my number and you get Discord free for life, okay? And the rights offering announcement is what can make you $1 million. That's how I got from $15,000 to $100,000, then to $1 million, okay? It's with $500,000 worth of loans over the years, $100,000 here, $100,000 there. But we got our big gains from Cornerstone because that doubled for me in 2021. We loaded up again last year during the rights offering. And I say all this to say that Cornerstone held up well for us. Even the triples held up well for us. Go look at the charts of the triples as well. They held up well for us. I mean, even just something like UPRO, okay, UPRO, go look at a chart of this. It is now back at the highs as well. So this is how we're outperforming. It's with the triple C's, but it's how we deleverage from Yieldmax, Defiance, Roundhill. Okay, it's how we deleverage from those funds. We sold a lot of Yieldmax names during the recent volatility. Okay, went back into YMAX. Why not? Because that has all of those volatile funds. Each vehicle was neutralized during the recent downturn. All right, again, we talk all about my hedges in Volume 5 and how we delever in Volume 7. I'll just say it a million times because that's how I'm outperforming. This performance that you see, it's because I delevered. It's really that simple. And I hedged. Okay. So how did I get my income up at the same time? Why did my income, well, my income rose because we used those short income ETFs. That's why we have over $1 million in dividends. It's because of the short income ETFs. However, we also raised our margin. recently. Why did that happen? Am I doing something wrong with this margin debt? Well, first of all, this margin debt doesn't show up on a credit check to bank, so I don't care how high it runs. And I've negotiated my rates down twice. Okay, many of my members have as well. All right, so I have low interest margin. Okay, it's below 5%. And anytime you need the script, just text me. You have my number, so text me when we're ready for the script. However, I'm getting to premium members first. As you'll know, I'm just always overwhelmed with requests because I gave everyone my phone number, so that's just how it goes. Please be patient with me. I'll get to the platinum members after I get to my premium members. When we're using our margin, okay, I like to get more income, especially if I use short vehicles. And so that's why we raised our margin last week. I already discussed this, but we're at 1.3 million in dividends. Okay, and our margin debt is 763. Why did it rise? Okay, and again, I'm not even worried if it does rise. First of all, I know exactly how to delever. I keep saying it. All of my names are on the chop block. My members know which names I can delever out of right away, not lose much income, and then bounce back even stronger, not really even take any losses, because a lot of these funds that we own fall less than the market on down days. Okay, even many Yieldmax funds fall less than the underlyings on down days. So I have this margin debt. Why did it rise? It's because I closed my puts for pretty massive gains. We had 50% gains in many of my puts. I'm not talking about puts I buy to hedge my account. Those were up 100% or two during the recent downturn, okay? And I didn't ever take the profits. One of our Misty puts was up like 500% in one day. I was posting it on Circle. But I'm not even talking about the puts that I buy. I'm talking about the puts that I sell, okay? The puts that I sell to lower my margin by 50,000 to 100,000 because these are naked level 3 puts. All right, that's why I raised my margin up again, because I delevered, okay? I closed a lot of my puts, which then raised a ton of available withdrawal, okay? That's how I got my available over 500,000 again, even with many 100% maintenance names that we have, okay? Because many of our names are, again, 50%. One thing I like about WPAY is that it's actually 50% maintenance with leverage, okay, which is hard to find, okay? You look at WPAY 50%, go look at UPRO, okay, which we're not buying UPRO at the highs. I just want to let y'all know, I'm not, you have to learn how to play Cornerstone properly, okay? I'm not just saying buy Cornerstone blindly, and I'm not just saying buy the triples blindly, okay? You have to use them properly, okay? We discussed how to play the triples in volume 7 and how to play Cornerstone in volume 4, okay? Just be aware. All right, so UPRO is 75% maintenance. Other triples are 100% maintenance. WPAY is 50% maintenance. So I like that aspect. But WPAY is not as diversified, okay? And if you need help understanding maintenance, that's in my volume 3 e-guide. I'm sorry, I don't have time to explain all these different concepts. The video is, it can only go so long. So, again, maintenance, this is the key to what we do, okay? For every $1 you put in your account, you get $4 of purchasing power. So we have $2 million in our account, but we get over $8 million of purchasing power. The reason why you don't see 8 is because I have a lot of my money invested and everything is maintenance, all right, when you're using a pattern day trading account. And so I keep my available withdrawal high at all times so I can withstand corrections. I can pay my bills, live out of my brokerage account, swipe my E-Trade card, do whatever I want with it. I can buy whatever I want on margin with low interest. It's better than credit cards. And then my dividend, just pay it back at the end of the week. But I also want to keep my available withdrawal high during times of, heightened volatility. So I closed my puts, all right, took, again, massive gains, like we had 50% gains in those BidX puts. If you remember, we had 50% gains and, we sell puts on the triples. We sell puts on everything that I can, that have good enough options that I can think of, that are indexed and high quality. And again, we talk all about how to sell puts in volume 6 if you need help selling puts. But that's why I was able to, raise my margin debt without taking on new leverage. I actually deleveraged because I closed those puts, all right, for massive gains, and that flooded back a lot of available withdrawal. I can always sell more puts again, get more income, lower my margin, but I'm not even interested in lowering my margin right now because my dividends are over 100,000 per month, okay, because we make over $1 million per year now, 1.2 million. So my debt's going to go down so fast, I don't care. And the compounding machine, the experiment that we started here at my channel has begun, okay? You can see that I haven't, this is a very real effect, this compounding effect that we get from the triple C's, which gives us our wealth, our growth in capital gains. We're up hundreds of percent in our triple longs, okay? You can see all those holdings anytime in Circle. And so we're up hundreds of percents, compounding our wealth with the triples, but we're also compounding our dividends, okay, which pay down our margins so fast, and that's what gives us our performance. Okay, how are we outperforming? Okay, again, we stayed in Cornerstone. We hedged our ULTY and salties. We delevered out of WPAY, all right, and switched into other names that would bounce back even harder. WPAY is 50% maintenance, correct? We actually got out of that, went into higher maintenance names, but actually raised our available withdrawal. Yes, you heard me correctly, because we manage our position sizes with those higher maintenance names. And again, that's all in volume 7. So I know this sounds like, again, I'm speaking another language, but it's really not if you, just get your foundation for all these concepts. So when we close those puts, it raised our available withdrawal. It actually delevered us. And now we're even safer. We can do whatever we want with our brokerage account. I can go sell more puts if I want to, lower my margin, but I don't care to lower it because my dividends will pay it back so fast. And I have other names on the chop block that I can sell immediately, hundreds of thousands of dollars worth of names, literally, that don't have much of a dividend at all. So I could sell, delever, bounce back even harder, and then also, and I'm giving you the whole secret, you can see that, and then also keep the income the same so that we just keep knocking down our margin. Okay, and then that's how we grow. That's how this growth in our account came. It's because we preserve our account on down days very well, I think. But then our dividends come in every weekend. We get 20,000 a weekend every weekend. That then pays our margin down, which grows our account. So when our margin falls, okay, if we go from 763 to 663, our account value will go from 2189 to 2289. Okay, we fall by 100,000 in margin debt, we rise in our account by 100,000. That's how I'm getting my growth. But you have to do it all properly. It's all in my e-guides. Okay, once again, it's been a pleasure, everyone. Okay, if you need help living financially free out of your brokerage account, email me for my e-guides at ikatot48@gmail.com, or head to my website right here, unconventionalwealthideas.com. It's all linked in my bio. This is how we're outperforming the markets, okay? We're using Yieldmax and margin, but we're delevering properly around these downturns. Here, come here, buddy. And we're using WPAY and ULTY properly as well, okay? That's how we're up 32% for the year. And that's how we're earning over $1 million in dividends without the decay, with the day's gains, as you see here. You saw those, you always see my day's gains in past videos. This is how we're doing it. You just have to do it all properly, all right? So remember, when you buy my e-guide, you get my number and Discord free for life, okay? Great stuff there, buddy. Give me a high five, please. I love you, man. All right, and again, I hope you like this video, okay? If you like this video, please click like or subscribe, okay? And I'll talk to you soon. Denali, this is the way. Yes, it is. You're welcome, Brazuca. Travel Life, you're welcome. See you tomorrow on the Teams chat. Exactly. Definitely will. Mandalorian outfit is cool. He's ready for Halloween already. Absolutely, Silver. They liked your outfit, buddy. He said thank you. Richard, we'll talk more about that next time, okay? All right. I enjoyed it. I'll see you on the next one. Take care, everyone. Bye-bye.